Business at 9, I'm Shibani Gharat. Now, the West Asia tensions are escalating further. US President Donald Trump has announced on Truth Social that Iranian blockade is back. He has said that Hormuz is open and will remain open to without Iran. He has also said that the blockade only applies to Iranian ships or customers, while countries will have fails and open use of Strait. He has said that he's called US the guardian angel of the Hormuz Strait. Soon after this post, Brent crude and WTI oil jumped above 4%. The impact of the Trump's comments and the West Asia tension are also visible on the Wall Street. The broader market index lost 0.4%, while the Nasdaq Composite was down 1%. The Dow Jones Industrial Average traded down 56 points or 0.1%. S&P 500 dropped to a session low. Now, to discuss, the latest on the West Asia crisis, we are now joined in by Anab. He's a global market expert and strategist, and he's joining us from London. Thank you, Mr. Das, for joining us today on ET Now. It was just a week ago that we were discussing, the threat being issued by President Trump, and now he says that, he is going to, blockade the Strait of reinstate the blockade on the Strait of Hormuz yet again. What will be the immediate impact of this on, the oil prices going forward? Because there has been a 4% jump already seen today.
Yes, well, thanks for having me back. Yeah, look, I agree. I think this is, it's as you say, right? The price of oil is jumping, bond yields are rising, currencies are realigning somewhat, and equity markets are responding accordingly. So because at the margin, this is a bit more of a stagflationary hit, right? The price of oil up, driving inflation up, not so good for growth, not very severe, but still meaningful. I think it illustrates that, as we were discussing previously, the ceasefire is not very solid. Nothing has really been agreed, and both the U.S. and Iran are jockeying for control of the Strait of Hormuz. One of the interesting things is that President Trump is trying to charge for freedom of navigation, and that is not something that the global hegemon should be doing, right? The global hegemon, one would expect, would be providing freedom of navigation as a kind of global public good or service. So I suspect that what he's trying to do here is make it clear that it's in everyone's interest for the U.S. To emerge on top in this contest of wills with Iran. But of course, I don't think anybody is really fooled by this. What's happening is that Iran has turned the strait into a bit of a chokehold. And if this is allowed to stand, it'll be a bit of a precedent for many other narrow passageways through international waters in the world as a whole. So I think the U.S. is going to continue to try to do what it can to put the genie back in the bottle. But it's going to be very difficult to get that done. In the end, there'll presumably have to be some kind of substantive negotiation. And I guess both sides will have to make some sorts of concessions in order to get a deal done. And if not, I suspect we'll continue to be facing this jockeying in the strait and some volatility in oil prices, bond yields, currencies, and indeed equity markets.
US can do what it can to put the genie back in the bottle, but is a blockade and this escalation in the region the only way to put the genie back in the bottle, or there are other ways which maybe US has tried and failed over the past couple of months, and that can be again worked with?
Look, I think, the U.S. can resort to, a kind of all-out bombing campaign once again. But Iran has demonstrated that it can resist a bombing campaign and at the same time target ships in the strait and target the economic infrastructure and energy production facilities of U.S. allies in the Gulf, as well as U.S. bases. So I think that's why he's resorting once again to a blockade that targets Iran. I suppose in principle, the president could order a storming of Karg Island or some other such measure, as he's threatened in the past. But boots on the ground, I think, is a very strong commitment. Last time we were on together, we were discussing how the midterms impose a constraint on how far President Trump can go, and I think that applies very much to the idea of boots on the ground. So I think he'll continue to try and warp and weave and steer between these two narratives, right? One that Iran is in control, and the other that he's in control. And that he, like I said, he'll be continuing to try to put the genie back in the bottle. One may hope he succeeds, but it's not going to be so easy.
Das, will these sustained $100 plus barrel oil prices tip some of these, vulnerable economies like Europe and Asian economies into recession going forward in the months to come?
Listen, I think if we get, very high oil prices, I'm not sure that $100 would do it, but if we get significantly higher than that, then there'll clearly be significant demand destruction, as there was earlier in the year, particularly in Asia and perhaps in Europe as well. I think it's very interesting that we are, as you say, we're up 4.5% in a bit of a jump move since President Trump made this kind of announcement. But the level is still not that high, and I think that is partly because China has been buying much less oil than expected, and reserves have been used to depress the spot price. So I think probably the worst will be avoided, and I think the market will continue to think that President Trump won't go all out again because of the midterms, right? So he won't, launch a full-scale attack again. In all probability, he won't put boots on the ground, I think, is what market participants and oil traders in particular are thinking, and I sort of agree. Trump needs to try and regain control of the situation, but he'll be constrained in how far he can go because he doesn't want the price of oil and gasoline to go through the roof, and he doesn't want to put boots on the ground, lest that really affect things in the midterms. So I think we're going to be in this kind of range-bound kind of holding pattern with volatility in the markets, and with volatility in the news flow, not least coming from President Trump himself, as we approach the midterms. And maybe there'll be a more serious effort, either at negotiation or at its opposite, right, hostilities after the midterms once again.
Right. Specifically, also, Trump has specifically mentioned, the Iranian ships and Iranian customers. So help us understand, will, the OPEC and OPEC Plus will be able to fill in the gap now at this point in time if, the Iranian oil exports drop to zero?
I think, the Iranian oil exports are not the big issue here. The big issue is what happens to the ships that are still there in the Strait, and to the production and export capacity of the Gulf countries. Iran makes a difference, but probably only at the margin. And I suspect that the price of oil fell so steeply because in the short term there was a bit of a glut, because all of a sudden the tankers that had been storing oil effectively stuck in the water in the Strait were coming back to the market, right? So we bounced from a level that was depressed by this kind of expectation of oversupply once the ceasefire took hold. Now I think the question is, if Trump succeeds in blockading Iran once again, can those ships get out of the market? Get out of the Strait and get their oil into the market? And I think the answer to that is sort of, perhaps not. It sort of really depends on how severe the blockade is and how much Iran is able and willing to retaliate, which could be quite substantial. But like I said, as we were discussing before, the midterms continue to impose a constraint, and that probably implies a range-bound oil price rather than the kind of surge to 100 or more.
Mr. Das, you also mentioned how the Strait of Hormuz has set the wrong precedent, and there are other narrow waterways, passageways, and the countries around it can also use them, like how Iran did, is what you mentioned. Now, will the world economies now look after this example of the Strait of Hormuz, when dealing with nations, or for supply chains and smoother navigation, some of these choke point deflections and larger routes, and what is the kind of impact it will have on insurance and shipping?
I think most of the other choke points in the world are not at direct risk of a kind of war premium. Some of them could face that, right? One could imagine Taiwan Strait, the Straits of Malacca, the Bosphorus, perhaps even. But I think we're not there yet. I think what's happening at the moment is that I suppose some governments are musing, some of them out loud, about the possibility. One will have seen reports that this has been mentioned in the case of Indonesia when it comes to the Straits of Malacca. I think there's going to be, if there's a direct effort to do such a thing in peacetime, there's going to be a lot of opprobrium, right? A lot of resistance to this because it would be a violation of the international law of the sea, and the UN Convention on the Law of the Sea in particular. So I don't think we're going to see this precedent, creating a wave of blockages and threats in various straits. But I think what it does suggest is that an extremist, if a country is threatened, or actually if there is a war, or some other kind of issue like a blockade, we may get to see some more of this happening as the Iranian precedent sort of comes into the frame once again in other parts of the world.
Right.
And I think that's one of the reasons they're going to do everything they can to prevent this from being allowed to stand.
Right. Mr. Das, thank you so much for joining us today on ET Now yet again.
My pleasure. Thanks for having me.